Hey there, my fellow traders and ninza.co family. Let's dive into how Zephyrus Force handled its second scalping setup on April 8th, 2025. This time, I'm still trading on the ninZaFamily chart. A buy signal popped up, price started moving in our favor, and then Zephyrus Force plotted the trailing stop line. I followed it and moved my stop accordingly. And once again, price pushed through and hit the target cleanly. Right after that, another buy signal came in. But I chose not to take the trade. Why? Because the signal was too close to the upper cloud band, which is a key resistance zone. That's a no-go for me. It's one of my core rules when using this system. If the setup is too close to a strong resistance, I'll skip it and stick to my plan. Discipline first. Next, as price pulled back into the Fibonacci retracement zone, I got ready to take a new trade. This time, I used EOB ordering to trigger the entry right at the close of the bar. Super fast and precise. That's one of my go-to methods to avoid lagging behind, especially when the market's bouncing off key technical support zones and can accelerate quickly. And get a win trade. After that, price pulled down into the lower cloud band, which also lined up nicely with the Fibonacci retracement zone. I placed a buy order using EOB ordering, timing it right at the candle close. That gave me a clean entry, and the trade played out beautifully. Price pushed up and hit the target without hesitation. Then came a sell signal, this time a price action pullback setup. I took the short, and it turned out to be another winning trade. Same playbook as the earlier buy. I used the Zephyrus Force cloud as my take profit zone. For the stop, I either placed it near the lower edge of the cloud or used the deeper Fibonacci levels, like 76.4% or 100%, depending on how price was structuring. That's how I manage risk tightly, even in case the market pulls a sudden reversal. Next, a buy signal showed up. I took the trade, but this time, I played it safe. As price started to move, I quickly trailed my stop to lock in some profit and cut down risk. In the end, it was just a small win. But the key here is sticking to the principle. When the market doesn't follow through strong, capital protection comes first. Next came another buy setup, and this time, I decided to take 2 entries instead of 1. The reason? I noticed something important. The upper cloud band was curving down sharply, a sign that previous selling momentum was fading, and buyers were starting to step in. Plus, this was an early trend signal, the kind I usually look to scale into. When that kind of confluence shows up, I'm more than happy to add size and aim for a bigger payoff. Then came a strong drop in price, with no real signs of a reversal yet, so I stayed on the bearish side and took another sell. But since this entry was quite a bit later into the trend, I knew I had to be extra careful with risk. I adjusted my stop loss, moving it from the 76.4% level up to 38.2% on the Fibonacci, just to tighten the risk and protect gains in case price snapped back. That trade hit target as well. And thanks to solid risk management and staying disciplined throughout, I hadn't taken a single loss in this entire sequence. That right there is the power of proper risk control and trading discipline, the real backbone of long-term. after the drop, price started to reverse, and a buy signal showed up right away. Once again, it was an early trend signal, clearly visible as the Zephyrus Force cloud began to slope upward, signaling renewed buying pressure. I took the entry, and the move played out clean. Hit the target nicely. A new sell signal came in, and I took the trade following the plan. But this time, the market didn't go my way. It ended up hitting my stop. The key here is that I had already adjusted my stop loss, moving it tighter, from the 76.4% level down to 38.2%. I did that early because I noticed momentum slowing down and I didn't want to leave too much on the table. That small shift helped me limit the loss to a minimum. Yes, it was a losing trade, but I was still fully in control. That's what I always remind myself and others. Winning is great, but when you lose, make sure you lose with structure and discipline. After that, I made a conscious choice not to take either the buy or the sell signals that came up. And honestly, that saved me from 2 potential losses. The buy signal came way too close to the upper cloud, which based on my system is a high-risk zone with limited room for price to move. The sell setup that followed happened right in the middle of a choppy sideway range. No clear direction, no strong conviction. So I waited. I stayed patient until price showed a clean and strong bullish reversal. That's when I re-engaged and took a new buy, and it hit the target. Sometimes the best trade is no trade. And this was a perfect example of that mindset in action. Next up, I got a pretty solid buy signal, and the market did move in the right direction. But I ended up getting stopped out early before price reached the target. Was it a bit frustrating? Maybe. But the truth is, it was part of my plan. I didn't lose because of a mistake or bad decision. I lost within my rules, and that's something I'll take every time. In trading, sometimes you give up part of the move, but hold on to your discipline. And that's what keeps you in the game. Not just today, but for the long run. Right after that, the market started to reverse, and this new sell signal came in at a perfect spot. It was right near a strong resistance zone, and the price structure supported the idea. The previous uptrend had already run pretty far and was clearly losing steam. That made this bearish setup not just valid, but high quality. It had the right context, right timing, and strong technical confirmation. This is the kind of trade I look for: clean structure, momentum shift, and a signal worth taking. After that came a series of solid sell signals. The market was clearly in a strong downtrend. But I didn't jump in on every single one. Instead, I picked just one high-quality sell setup and executed that. To me, not every valid signal needs to be traded, even if they look good. Overtrading in a trending market can easily kill your edge and mess with your mindset. My approach is always, less is more. One clean, well-timed trade can be all you need to make your day. Like I said in the previous video, just because you get a signal doesn't mean you have to take it. What really matters is understanding the price action and the story behind the candles. In this case, after the bullish reversal, a few red candles popped up, and it might have tricked some traders into thinking the trend was breaking down. But right after that, we saw strong green candles coming back, and price was still riding along the top cloud. That's a subtle but strong clue. Buyers are still in control. And for me, that's a valid entry. The market wasn't reversing. It was just gathering more fuel to push higher. Next up, I took a losing trade, but the risk was so small that it didn't shake me at all. For me, a loss like this is just part of the game. As long as it's planned and within my risk parameters, I accept it and move on without hesitation. Losses don't hurt, uncontrolled losses do. Next, from my personal analysis, I noticed that price action started printing a lot of back-to-back reversal candles, clear signs of indecision, and a tug-of-war between buyers and sellers. At that point, the market just didn't feel clean anymore. So I chose to stay out, didn't force any trades, and that helped me avoid 2 potential losing setups. Sometimes, the best trade is no trade. Next, price pulled back to the lower cloud zone and lined up with a key Fibonacci confluence area. Even though the bigger trend was starting to shift, this buy trade still hit target. It wasn't luck, it was discipline. I stuck to the playbook, trusted the system, and didn't let market noise shake me. Sometimes, when you simply follow through and stay consistent, the system still delivers, even in less than ideal conditions. Next, I skipped all the sell signals in this area because none of them showed enough strength to break the previous low. That's a key rule in my system. If a signal can't break structure, I don't take it. And thanks to that filter, I avoided 3 potential losing trades. Sometimes, the real edge in trading is knowing when not to pull the trigger. And finally, one solid buy setup helped me hit my profit target for the day. It wasn't the biggest trade, but it was the result of everything I'd done right. Being patient, skipping the weak setups, and sticking to the plan. That's the kind of trade that rewards discipline, not prediction. And finally, one solid buy setup helped me hit my profit target for the day. It wasn't the biggest trade, but it was the result of everything I'd done right. Being patient, skipping the weak setups, and sticking to the plan. That's the kind of trade that rewards discipline, not prediction. Let's take a look at the results from today's session. Over $2,000 in profit with just a bit over $200 in drawdown. That's a reward to risk ratio of 10.1. Even with 6 losing trades, I only lost around $200 total. That's just about 33 ticks per loss on average. On the flip side, I had 9 winning trades in a row with only 2 consecutive losses. This is what true risk management and trading discipline look like. It's not about catching everything, it's about controlling what you can. Thanks for watching, and I hope you'll also catch your winning streaks with Zephyrus Force.